Hi. One question which is on top of everybody's minds these days is the geopolitical situation, specifically the Russia-Ukraine situation and the impact it has on the markets. I'm no geopolitical expert, but let me give you an analogy, which is the first Gulf War when Iraq invaded Kuwait. So what did the international markets do? While the military build-up was going on the Iraq-Kuwait border, the markets fell, and they fell significantly. But when the actual invasion happened, the fall had already happened. And when the UN and the Western nations intervened, the markets actually went up. So the question is, how much of this Russia-Ukraine standoff is in the prices? My guess is quite a bit, except for things which are directly impacted. Like, for example, oil and agri-commodities are directly impacted. What else is directly impacted? Parts of Europe, because a lot of the Russian and the neighboring countries supply a lot of the European energy needs. So those are things which will be directly impacted, which is probably why the developed markets are not looking that good, barring pockets like Canada. Emerging markets are looking better. In particular, India is looking better because India had been an underperformer for many years if you compare with other international markets, barring 2021 when it did well. So it still looks as if the outperformance will continue. So the geopolitics may not be such a big risk for India other than the oil bill. But we have issues that we should look at, including risk of a rupee depreciation, the inflation differential which I have spoken about, that wholesale price index is increasing and the producers are not able to pass on those costs to consumers, which means margin compression. So you have to choose carefully, but it may be time to start looking at getting back into the markets, maybe in a staggered manner, starting now for the next 3-4 months. So that is something you can think about.